Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. How are you doing, guys and girls? In today's session, we will be considering the indicator named as a Schaff train cycle, which can be shortened as STC. This is a oscillator which we can utilize to get us the signals whenever there is a change from bearish to bullish or bullish to bearish, whenever there is a change in the momentum for the instrument of our choice. We can rely on this indicator to catch it early. It usually doesn't lag much compared to the other indicators, and also to make it reliable, the components like exponential moving average and the phase, or you can say even cycle, using the time factor, time as one of the variable, this indicator is made more reliable. So this, you can say, in a way, is a more reactive version of the MACD. MACD also relies on similar formation, but there is a lag in case of MCD. But for STC, the sharp trend cycle, we usually see the signals being generated much earlier. So let us now head to the JForex 4 developed by the Dukascopy Bank SA to see how we can utilize this particular indicator to get us profitable trading opportunities. Is the Euro USD chart with the each candle period defined at hourly. To add this indicator, all you need to do is a quick search. If you simply type in first word, here it comes, ST cycle, shaft trend cycle. All right. So we have this indicator which has smooth output values, even though there might be sharp fluctuations. In case of the underlying instrument, the plotting of the STC is usually comparatively lot more smoother. But as you are looking at the chart, you can notice one thing, that after the dominant trend has continued to go in the same direction, it will have this output value remaining in the overbought or oversold territory for extended period of time, unless there is a sharp reversal and a clear move in opposite side. So if you want to use it for figuring out the overbought or oversold scenarios, it is a good indicator. But if the trend continues for prolonged amount of time, then it will have you in wrong side, in the opposite side of the train for extended period of time, with these continuous move, which is going to keep the indicator in these opposite spectrum. So that is one drawback which we do have to keep in mind. Now if we have to use this indicator for the trading purposes, we can look at these output of the STC and look at these levels, 20 and 30 on the lower side, and 80 and 70 on the higher side. So for example, the simplest use I'm telling you is simply to look at the output value whenever there is a change from one side to the other, with this output value rising from below 30 to above 30. That is one way to look at it as a trend change. So you can mark these as a turning point, and whenever there is this kind of move which is indicating the possibility of a turnaround in the underlying instrument, you can try to look for the trading opportunities in these change circumstances. So here we saw in today's trading session earlier in the day, the trend changed from bearish to bullish, and after that there was this significant move for the Euro USD, almost 100 pips move from around this level. So if you had used this STC you would have been in a good position to profit from these move. Of course, not all these move would have been captured using these indicators, but nonetheless, after we got the confirmation, the price continued to trend in the same trajectory. So that would have gotten us a fair amount of profit in this trade, even though the entry would have come up late. Same thing, if we go back in time to yesterday's session, here also there was this trend change from lower side, from this higher side to the lower side. So when the value dipped below 70, we got this fresh confirmation, and if you had gone for the short sale, here also around 60 to 70 pips move materialized, so you would have been in a position to capitalize on that as well. But not all the trades, not all the signals being generated are going to be profitable. So we have these other instances where the signal was generated, but the price didn't really dip much, and it changed, it reversed course and then went on to rise again. So this would have been a false signal. And if we look at this here, it would have been a positive signal, but the price didn't really go anywhere for quite a long period of time. It remained around the same levels, and then the turnaround happened again. So this would have not really made much money. Of course, if you had gone for the entry somewhere around here, you would have had plenty of time to make exit in a small amount of profit. And if you had gone for the change and gone for the closer of the trade around these levels, even in that scenario, the losses would not have been much. But this fact is something which we have to keep in mind, that not all the signals generated by the STC, the sharp trade cycles, are going to be profitable. So we will have to always go for the good amount of risk management. We will have to always work around and keep in mind this possibility of the losses. So we will have to plan accordingly for trades being generated. So whenever the underlying instrument is not really going anywhere and it is consolidating in a narrow range, we will have multiple signals being generated by this indicator, but the underlying instrument, it won't be going anywhere. It will be continuing to consolidate around the same price levels. We will have to be careful, but that is the case with any indicator you work with. Not all the signals are profitable, so we do have to keep that in mind. And one more of the drawback I explained to you earlier is that if the trend remains strong, if it continues to remain in that existing trend, then we will have this extended period of output value being overbought or oversold. So we, if feel like going for the contra trend, then we might end up going for a loss making trade, as it is not really advisable to go against the trend when the trend is quite strong, because the value can go anywhere and we can't really put a upper bound or a lower bound limit on any of the move which is happening in the underlying instrument, the instrument of our choice. But there is of course advantage in its responsiveness and also the reliability. There are smoothing factors in place, so we have these signals being generated which are relatively smoother looking. If we look at the volatility of the underlying instrument and the output of these STC, the sharp trend cycle, you will see that even in face of the high volatility, the instrument tends to be quite smooth. So whenever these signals are generated, those are likely to be quite reliable, but of course we do have to go with the risk reward ratio in place and try to optimize the profit if we get the trade right, and if we get the trade wrong, then of course the focus has to shift towards minimizing the losses, minimizing the drawdown, and we then have to get ready for the next signal being generated by these indicators. So that's the concept, and some of the uses, some of the representative examples I try to give to you using these indicator. Now let us look at some of the customization options which are provided on the platform, so that you can tweak and tinker with the indicator to come at the combination which is likely to work best for you. So you can change the applied price. This is being a case of typical price being used as the applied price. But depending on the kind of applied price you use, you will see that the plotting of the indicator is going to vary quite a lot. You will have to see what kind of applied price is going to work out best for you. So for example, if you use high price as the applied price, you will see that the change of the trend from bearish to bullish will be picked up quite faster compared to the other prices. And if you go for low price as the applied price, then the change of the trend from bullish to bearish will be picked up quite early. So depending on what kind of applied price you are using, you will have to keep these factors in mind. So there is always going to be some change depending on these parameters. The short-term period and the long-term period here, as per the default setup, is of 23 and 50, along with these cycle period of 10. You can vary these combinations. You can try it out what kind of combination will work best for you. So this is the default setup, but if you feel like, you can vary it, and accordingly you will see that the plotting of the indicator is going to be quite different. As I have reduced the short calculation period to 10, we are seeing that the indicator has become much more responsive. But when the underlying instrument is going sideways, in those kind of circumstances, the wrong signals are likely to be generated quite frequently. So we always have to try to balance between responsiveness and the reliability of the indicators, trade signals. So we will have to balance this trade-off and work around with this combination. Now I am restoring back the 23 Schaff cycle periods. You can vary this as well. Let's try out changing it to 20, and you will see that the smoothing factor has increased much more as we have increased the cycle period. As a result of that, we are going to see these changes in the trend taking place only when there is a significant trend change, significant price move for the underlying instrument. So the confirmations of the trend change for these extended PC came in quite late in comparison to what we were observing when we were using the 10 as the sharp cycle period. Output, you can go for different types of color combinations. I think the existing one is just fine, but if you feel like, then all these options are provided to you where you can vary the color combination. Even styling combination can also be varied. All these options are provided to you. Levels, we have 4 levels in place: 20, 30 on the lower side for detecting the change from bearish to bullish, and 70 and 80 on the higher side for detecting the trend change from bullish to bearish. The advanced editing options are also provided. You can have the recalculate on new candle only. So whenever you opt in for this, the output will remain fixed remain the same throughout the current candle period. For new candle, highlight the time period zone. Whatever is your calculation period can also be highlighted, so it becomes much easier for you to remember what is your calculation period. Calculate from the custom data. The customization can be done in terms of the instrument, candle period, and the spread side. If you want this indicator to be available on all the candle periods, you can have it, or else you can even specify on which particular candle period you want it, and only on that particular candle period you will have this indicator plotted on the chart. And for other candle periods you can add other indicators and those will show up there, so you can have multiple data points, multiple signals being generated on different time frames, and then you can try to make informed trading decisions by using these multiple data points. The base period can also be varied, but it is not really going to make much of a change in the output. So I'm going to restore it back to 4 hourly. That's all from my side for today's session of the JForex indicators explained, where we saw the concept, the uses, the possible customization options provided on the platform of Schaff train cycle. And if you have any query or any idea to share, do write to me in the feedback, and I would be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead, a profitable day ahead. See you next time around with a equally interesting indicator to work with. It's customization, it's trained detecting mechanisms being explained by me. So do come back. See you next time around. Goodbye.